let's look at what happened to Vedanta rather in isolation, and then we'll talk about the skirmish or the reversal what we saw in metal stocks. Look, metal stocks have gone through a gangbuster move, and the underlying theory is very simple, that metal prices will benefit because of demand and because of ESG constraints. You track metal as a pocket more than me, Mubina, so I'm perhaps saying the obvious space, which is that the setup for the metal for next couple of months and for next couple of weeks is not looking bad as the as a category. Now what happened in Vedanta? Well, simple to understand. Vedanta needs cash. The cash, in a sense, historically has been, the Hindustan Zinc dividend payout, in a sense, has been rescuing the promoters and the Vedanta shareholders for the ability to service the debt. So one side we've seen uptick in Vedanta stock, largely in anticipation of a strong dividend payout and the underlying rise which has happened in non-ferrous prices. But when an overcrowded trade gets challenged, market will react and in some case overreact to the news. I think yesterday's market reaction in Vedanta was an overreaction, but there are challenges in Vedanta. Those are very unique challenges which may not apply to an Hindalco or a Nalco. So Vedanta will be a volatile stock, but the underlying force of the commodity prices is so strong that right now big decline or bad days or news driven sell-off, which may not have very long-term impact on the balance sheet, should be considered as a buying opportunity. And that is where I think Vedanta at lower levels will find some buyers. Not because markets are in love with the balance sheet, they are not. But markets know that the fundamental cycle for non-ferrous and metals, Mubina, is so strong that right now you need to be a buyer on bad days rather than running away from the fear of gravity.